Good morning, everybody. Thank you for watching Taxes Made Easy. And, just want to say a wonderful morning and to the country. There's a lot of news out there, a lot of stuff happening in the world. The world is becoming a scarier place, um, and a lot of news about what's happening in the Middle East. So we'll touch on that, but really want to make our focus in the topic for the day is how to actually fill out and complete the IRS financial form. So we're going to start today with the 433F and walk through it. A lot of people ask these questions. How do I fill this out? How do I make sure I do this correctly? The IRS does not make it easy. Their forms are not the greatest, but we'll walk through that starting today in detail for you. So stay tuned and we'll be right back after this short break. Welcome back, everybody. And just kind of excited yesterday. I was able, or last night, I was able to go and do poll worker training for the very first time. And my wife's been doing it for years. It's she's stepping up, and she's going to be an inspector, which means she's running a polling station, which is pretty impressive. And she wanted me there to kind of be there to help her out and as her comfort. Not like I know anything about polling, but I learned some last night. But I think it's pretty neat to be involved in the process and learn and give back to your community. So the first article we're going to share is from the IRS and touches on that directly. Again, being good citizens is also being involved. And as Americans, typical American, I'm very guilty of it. It's easy to sit back on our couch and enjoy the comfort of our home and not get out and get involved in the community. So for me, I did coaching for many years. I loved it. And then my kids outgrew me, so I now am a referee. But, I think I could be involved in the community more. So I'm going to share this first article. It's from irs.gov. And it's talking about how they need volunteers. So again, volunteers needed across the country. What for? To sign up and learn how to help people file taxes. So this is through the VITA program. This is something they do every year. So people that can't afford to file their own tax returns. And they also have the TCE programs for the elderly. So thousands of volunteers help their community each year and also get invaluable professional experience. If you're thinking about entering the tax profession, this is a great way to start and do it on a volunteer basis and help out those that are struggling the most. I've worked with low-income tax clinics in the past, and they're great. The people that come in that just they can't afford anything. It really helps to have someone actually walk people through this, especially for the elderly. So they're nationwide. Prepare millions of tax returns each year for low to moderate income taxpayers. And there are options out there to get your tax returns prepared. You can go to the VITA clinics or contact them. You can also, there are free tax preparation, or there is free tax preparation through many online sites. IRS has launched their program. And again, these are for simple returns. If you have simple returns, again, I send people to these sources every single year, and the peak period for recruiting volunteers is October through January because they want everybody recruited and hopefully trained come January, starting with tax season. So if you are bored at home or you need something positive to do, or if you're interested in tax, CPA, this is a great way to get some experience as a volunteer. So I highly encourage people, if you have that time, help out those that are most needy in our community. So moving forward to then got a few IRS. They didn't have anything for a while, and they came out with 4 relevant articles today. So this is IRS moving quickly. I have to compliment them on this. Hurricane Helene was so bad that they're coming out with immediate relief, saying that you can use diesel fuel that's meant for farmers. So it's dyed specifically, and diesel fuel for highway use. It's usually only used by farmers and other things, such as farmers for farming purposes, home heating, and local governments. And it's not taxed because it's only used for these certain purposes. But they're making this fuel available to the public, and again, there won't be any penalty if you're using it during this emergency. So again, here are the counties in Florida, Tennessee, Virginia, where this relief has been made available. And those are the counties with specific counties. It's when you look at states, Alabama, Georgia, North Carolina, South Carolina, and then these specific counties. So if you're in these states, you can use this. If you're in these counties in Florida, Tennessee, and Virginia, you can take advantage of this break. So kudos to the IRS for moving quickly. And the next article continues with this. Again, yesterday I went over relief for another area that was posted 3 to 4 months after the incident. This is coming out very quickly, so okay, this is impressive. And this is disaster relief for part of all of 7 states: Alabama, Georgia, North Carolina, South Carolina, and then parts of Florida, Tennessee, and Virginia. So a huge area of the Southeast. And you now have until May 25th to file various returns where we haven't already hit the deadline. So if you had an extension, honestly, they put it out. Even if, the deadlines we were seeing were in February. They're putting this out to May 1st, 2025. And they've got various filing and payment relief. So anything that's due October 15th, which is pretty much your personal extensions, but also quarterly payroll and excise tax returns, and estimated tax payments that would normally be due on January 15th. And then also those same payments that would be due on April 15th. You're going to get an extension on that. So, so for the next few months till May, you're going to get a break. Make sure you get on top of it. But this allows you to focus on recovering. Don't forget about this, because this does come back, and I deal with plenty of people that went through a disaster and struggle to get back on track. And historically, the IRS has been more understanding when someone goes through a major disaster, but that only goes so far. And with today's IRS, I'm not sure how they would respond. But on a human level, most people understand that they're struggling to get back on their feet. Going with this same theme, Georgia's governor suspends the gas tax throughout the state, and that will save people about 32 cents a gallon. So that's actually a pretty helpful move, and effectively lowers the price of gasoline, diesel fuel by more than 30 cents. You should see these changes coming in by Thursday, so tomorrow. So again, that's another big help for people really struggling right now. The IRS actually came out as well with new relief for taxpayers affected by the terrorist attacks in Israel that are ongoing. So we just had another terror attack. A couple people were killed, 8 injured, something like that. And again, Israel is definitely under the gun right now. And again, I want to express that it's a human tragedy for Israel, for the people in Gaza, for the people in Lebanon, and soon people in Iran. They just launched a huge missile attack against them. We talked about that yesterday. And Israel probably will retaliate. So again, it's scary over the sea, more and more attacks, and as we edge even closer to a nasty, regional war over there. So this is for taxpayers affected by the terrorist attacks in Israel. You're going to have proof. You're going to have um, that you were over there, that you were affected by this. Don't just assume that you're going to get this tax relief. But 23 and 24 returns are now being kicked out all the way to September 30th, 2025, in the entirety of northern Israel, due to the constant rocket attacks from Hezbollah. They've had to flee and pretty much abandon the northern part of Israel. The civilians have. So it's pretty scary over there. Again, I would keep them in your prayers as we try to get this figured out. Staying with this, the United Nations came out and demanded another ceasefire. And as of Tuesday, reports are coming in of Iran's ballistic missiles hitting the U.S. And Antonio Guterres, Secretary General of the UN, and again, this article is not very favorable to the UN from townhall.com. And he says, I condemn the broadening of the Middle East conflict with escalation after escalation. This must stop. We absolutely need a ceasefire. And the question is, if you're going to talk about a ceasefire, both sides are like, look, you need to call out the other side. Israel did launch a bunch of attacks against Hezbollah, but after they've been suffering from missile attacks from Hezbollah for a year, since October 8th, the day after the October 7th massacre that Hamas committed. So again, it's just Israel's asking for balance here, and the UN is very much not favorable towards Israel. So the more this continues, the harder it's going to be to find peace and get more and more complicated. Coming up on a break in just a minute, not sure if I have time for this article, but do want to touch on this huge case and the economic impacts that it has with the Trump case. I know we got a little funny ad there. And this is Tish James' case against Trump for fraud in New York real estate. So again, this is typically it's a civil case. It's not a criminal case. It's a civil fraud case, but it's they ordered him. Judge Arthur Engorn ordered him to pay $500 million in damages. So just under $500 million with interest. And so again, this article is very much one-sided, but again, it talks through the response of the appeals court. Now, we're not going to get the actual ruling of the appeals court, but the appeals, and this is the New York Appeals Court, Court of Appeals, go through this and say this is unprecedented. This is not something that we want to have. And the biggest concern is, the law that she used was to go after people that were actively defrauding consumers, but it wasn't big enough, or they were hard enough to find that where it wasn't rising to the level where individuals could sue them. And it was never intended to go after something like Trump, where you have very sophisticated parties on both sides. And one of the biggest concerns here, and we are out of time, so I'm going to have to finish this when we come back. Welcome back, everybody. Just finishing up this article about the Trump trial and appeals. Again, we're just going off of what the appellate courts asked in their verbal questions. Doesn't actually indicate, well, it gives an indication of where the court is leaning. One of the biggest concerns, though, is that it can have a huge chilling factor on people doing business in New York. So especially in New York, real estate market, high-end real estate market. So plenty of real estate professionals in New York have said what they're accusing Trump of doing is something that's done regularly in the business. Again, these are from high-end banks negotiating with high-end investors. Both have sizable legal teams. They don't need. They're not the kind of average day New Yorkers that can't defend themselves against constant and persistent fraud. So the purpose of the law that Tish James is using, one, it's very broad and vague, but which is a problem. But the worst part of it is it can really have a huge damaging effect on um, the economy and the real estate market in New York. So since Trump's statements of financial condition admonish counterparties to perform their own due diligence regarding any loans or contracts, which is typical. I mean, just buyer beware. You're coming in, they're going to present a rosy picture. The banks are going to present, the negative picture, and they'll find something in the middle, which is typical. And he didn't even do that. His parties were top-tier financial professionals for whom price risking is their bread and butter. That's what they do. And they have top-tier legal representation and deep pockets to pay for litigation. If they get swindled, they sue. And ironically, in this fraud case, nobody was defrauded. The banks actually came to the defense of Trump in this. So let's see what happens moving forward. If he does get hit with a massive penalty, it could be very, very damaging for New York City that's already struggling. So again, this is another article came out yesterday regarding the port strike. And again, they call it Biden's port strike. I don't know if that's exactly fair, but they're probably doing it now in case the something changes with the election. It would probably be very different with President Trump in office versus President Biden. So we've talked a lot about how they started striking. It's been since 1977 was the last time they had a strike, and their 6-year contract just ended, expired Monday night, and the negotiations have been deadlocked. So coming from both sides, the biggest thing is the cost and the economic damage it's going to cost $3.8 billion to $4.5 billion a day as operations slow, and it's already expected that store shelves are expected to start going bare. I already have people that I have connected, friends and stuff in California, on the other side of the country, that are starting to go out and buy toilet paper. It's silly, but buy essentials, and it's something that's happening across the country as the entire East Coast through the Gulf Coast ports get shut down. So we're going to have, just like in the pandemic where we couldn't unload cargo and we had such a huge supply issue, we had cargo ships sitting out to sea, and some of their cargo actually spoiled and was ruined, just sitting out to sea waiting to be unloaded. Again, it's confusing. We have enough going on with the missile strikes in Yemen, and the Houthis attacking shipping in the Red Sea. So it's getting even worse. This is an interesting article. It's kind of a deep dive, and I'm just going to gloss over it because it is taking a deep dive, and we still have a lot of material to get through today. So it's talking about the recent Fed cut of 50 basis points, and it usually goes 25 to 50, quarter percent. That's usually how they move it. And this article really does question the wisdom of this. So back in the 1970s, they had a similar situation. The Fed loosened monetary policy too soon, and what happened? Inflation soared even as high, if not higher than before. So here's the thing: when you have someone playing with monetary policy, and it is playing, they don't know exactly what's going on. They're figuring it out as they go, responding to political pressure, to numbers in the economy, but there's no real solution. Raising or lowering the interest rate doesn't fix any of the underlying problems. So what they're showing is that in the 1970s, they had a painful double dip recession before inflation persisted at a lower rate and the economy cooled down through. So if you look at it here, 1975 had a huge jump in inflation, and then you go heading into the early 80s. This is going into the election, and it was Reagan didn't come in office until 81. This is when you had the highest inflation, and it really did take years for it to slowly moderate, come down, and it really wasn't until the Clinton era, well, you had George Bush and then the Clinton era that it mellowed out. And then in 2008, we cut the rates. Do it another issue. So again, we tend to go from extreme to extreme, but what we need is consistent policy that makes sense. One of the big concerns here is the Fed's balance sheet. So this is something I've touched on before. It gets very wonky into that, but instead of playing with rates, we should really be focused on cutting additional debt that the IRS carries. We had a $9 trillion debt in 2022. We've got that down to $7.1 trillion, but that is still 75% higher than pre-pandemic levels. So again, we spent like crazy. The Fed assumed all kinds of debt, and it's still almost double what it was pre-pandemic. So this is a massive increase in the money supply, which when you throw more money at problems, what does that do? Causes inflation. So if you want to get more into the weeds, this is a longer article, but talking about, are we repeating the same mistakes as before? And government is good at doing just that. So China, their economy has been struggling. It hasn't been growing the way it is. It's kind of floundered. And guess what they're doing? The same thing we're doing. And while it might help in the short term, throwing more money at a solution only causes long-term problems. And really that's, they announced rate cuts and aggressive deflation measures on September 24th because they're slowing the economy to get their inflation under control. But again, they're lowering interest rates here. Doesn't solve the underlying problems. So it's making it so people can purchase homes easier, lowering the cost of borrowing for all existing loans because that's the kind of control the government has in China. But again, you have finance experts having a pessimistic outlook because while they're playing with the numbers, it doesn't solve any of the underlying problems, which is the Chinese government is controlling the economy, telling what to do rather than let the markets work on their own. So, and by playing with an aggressive fiscal policy, doesn't inject well, here they're saying it's required to inject genuine economic demand, but again, it's what most Chinese have been doing is holding on to their money and saving more rather than spending it. And so this China's fallen into the trap of going to a consumer economy instead of a savings economy. So at least we're not the only ones messing up. I want to get more into policy here, and this focuses on some tax issues from the debate last night. And again, this is Fox News. During the debate last night, Tim Walz expressed support for bringing back the Obama-era mandate. So the mandate was the part of the Obamacare or ACA law that was very, very unpopular. So if you haven't noticed, nobody gets hit with the penalty anymore for not having health insurance. If you can't afford health insurance, they're not going to hit you with the penalty. This was part of the whole reason behind it was to force people to get health insurance, but the health insurance was more expensive than the penalty. So a lot of people opted to just pay the penalty because they couldn't afford it. Now, if you didn't have proof that you were covered with health insurance during this time period, you might have had it in one way or another, but you had to provide proof of it to avoid the penalty as well. Very unpopular. Trump got rid of it, and last night, Tim Walz, I'm not sure how familiar he was, but it sounded like he didn't know that it wasn't part of the law anymore. But he was pushing for an even more aggressive part of it, which is single payer. So, again, the single payer government run healthcare is pretty much where there's no more private health insurance. Now, private health insurance has taken such a body blow due to Obamacare or ACA that it's not nearly as common. I actually use an exchange myself. It's a cost sharing exchange that's much more affordable and covers my whole family. But a single payer system would force everybody to be part of the government mandated health programs. And if you don't, the penalty, they bring back the penalty, and it'd probably be worse because, again, they wouldn't have health insurance options aside from the government run plans. And that was a lot of people, when it was back, ACA was being passed, a lot of people complained and accused the Democrats of this being their ultimate goal, to go to single payer, getting rid of private health insurance. So he went on to defend the ACA and says it works, but we need to continue to do better. Back in 2018, Trump got rid of the penalty, which really hit poorest Americans the most. It was hit on Americans making less than $50,000 a year, and so they had to pay penalties simply because they could not afford the government-ordered health plans, which not so affordable unless you qualify for massive subsidies. And it's where if you don't qualify for those subsidies, it can be. I'm not part of the ACA plans because they're too expensive. And thank goodness alternatives have popped up in recent years that will cover us and my family. But it is very expensive. So going to single payer would make, again, that's a whole nother issue. Apparently Tim Walz thinks that's where we need to go, and we need to bring back the mandate. So I want to jump to another article. And this is one I kind of waffled about. Do I share it? Do I not? And I want to be balanced and present both sides of the issue. This doesn't really talk about the debate. It doesn't even really talk about what Tim Walz has said beyond a couple things here. But I think it's interesting to take a look at this. So this is CBS News, and they took most of this from an Associated Press article. So this is prior to the debate, is when this article came out. But it talks about his track record with taxes. So it's a very progressive system in Minnesota, which means the more you make, the more you pay. And it's one of the more progressive states in the United States when it comes to taxes. So they also supported a more generous federal child tax credit, and they actually have the highest child tax credit out of all of the states at $1,750, which gets tacked on top of what was $3,600 per child, but that was just for the pandemic. So both parties, or both candidates, the Harris campaign and the Trump campaign, is pushing for larger child tax credits. Vance has voted to expand it to $5,000. But this is more and more spending, and you have to counteract spending somehow. So one of the ways they want to do this is, another spending is to lower Social Security taxes. Now, this is something that is very popular. Trump has proposed this on a national level, and Walz did this in Minnesota. So people with an annual income of less than $100,000 and single files earning less than $78,000 were now exempted from state taxes on their Social Security checks. Yeah, if anything, Trump might be copying Waltz here. So, again, how do you pay for it? So it's, again, about 40% of the nation's 67 million Social Security recipients are making enough to owe taxes to the IRS. So, again, they're saying that Waltz paid for his cuts to Social Security taxes, and this is where the article just kind of goes off the rails and just makes it a cheap attack. But again, they get talking about the economy. They're saying GDP has expanded, but they've regained its lost jobs from the pandemic and is now back to where it was. So not exactly improved from the last 4 years, but has recovered their lost jobs, which most states have. It has a higher than average income of 85,000 compared to 78,000, but it also is home to many, that's been true for at least the last 3 decades. So there's a lot of information here. Just want to share some quick information here from Economic Outlook rank. It's ranked by this article, Rich States, Poor States, or this website, 44th for current economic outlook. And why? Because they're very high taxes. It's a higher tax state. 45th, 46th state as far as top personal income tax, corporate income tax, personal income tax progressivity, basically making the people with the most money pay a lot more. Property tax burden is only 29th. Sales tax burden is low, 15th. And other taxes ranks 38th. They do estate tax. It just kind of goes through these things. It kind of balances out. Well, can't say that. It's a higher tax state. They go after wealthier people more, but overall it's a more prosperous state. It is not a right to work state, which means you don't have an option. If you join certain jobs, you have to work for the union. So again, there are a lot of different factors here to consider going back and forth. We are coming up on our last break, and what I want to focus on when we come back, we're going to focus on the IRS Form 433F. How do you do this? How do you complete this? How do you do this in a way that the IRS will accept it and in a way that will help you? So it's very important to understand how the IRS does this and what they're going to be looking at when you're filling out this collection statement. This is very much the basic of any negotiation, and you should do this before you start negotiating with the IRS and have a good idea of how they're going to look at your particular financial situation. So we're going to be right back after this break and really take a deep dive into the 433F and how to complete this with confidence. So we will see you in just a bit. Welcome back, everybody. And again, focusing in on this collection financial information statement. So I got really keyed up about the news. There's just so much to talk about. But really going through this step by step, this first section here, and you can see whenever there's a thicker line, like A, B, kind of separates out the different parts of this. So this first section here is all about your personal information for you or your business. So, and if you have a business, if it's a business of any size, you really should be using the 433A and the 433B. So we'll get into those in future episodes as we go through this. So this information needs to mirror what's on your tax return, unless something's happened. So if you've separated, you're no longer living with somebody, you get divorced, you get married, you have a child, or you have a child that moved in with you that you'll be claiming. So again, social security number for you, your spouse, name and address, name or names, so your spouse's names. County of residence is important. This information, your telephone numbers, you don't have to put all that in there as if you have a representative, but it is important that they know how to reach you. Unless you have a representative, and then they'll provide their information. If you have a business, name of your business, EIN, type of business, number of employees. This little line here, don't skip this. This is very important. The number of people in this household who can be claimed on this year's tax return, including you and your spouse. And so the number of people under 65 and 65 and over. If you have someone living with you, let's say you have an adult daughter that's living with you and has a child. If she is working and claiming herself on her tax return, you cannot claim her, even if you're paying for pretty much all of her support. Now, on your tax return, it's a small benefit, $500 for other dependents that you claim. But when it comes to collection information statement, this can make a huge difference of roughly $700 a person every single month. So the yearly impact is more like $8,000 to $9,000 based on your finances. So it has a very different between the benefit for claiming a dependent on your tax return versus being able to claim someone on your financial statement. So it has an outsized impact here. So there's plenty of times I sit down and talk with people and say, hey, who all is in your home? Are they claiming themselves? If you have a parent that's living with you, or you're providing 50% of their more support, you can claim them as a dependent as long as nobody else is. If you have a child in college that you're supporting, if you have a child out on a church mission, etc., as long as you're providing 50% or more of their support and nobody else is claiming them, you can claim them, and they can only help you, can't hurt you, as long as they don't have income and need a file for themselves. So the reason there's a difference here between under 65 and over 65, and it's just based on your age at the time that you're filling out this statement. And it goes to out-of-pocket medical expenses. So it comes up later in the form. But again, this is actually a big part of it. How many people are they going to count in your home? And has a huge impact on your allowable, what they will allow for expenses. If you have a business, just put this information in here. Again, if you have a small business and it's easy to do, you can just include it in the 433F. Typically, though, I would recommend doing the 3 or the 433B if required by the IRS. So Section A is all about financial assets, personal bank accounts, account number, type of account, current balance value, and check if it's a business account. Pretty straightforward. A lot of people have more than one account because this is checking, online, mobile, savings accounts, money market accounts, and again, there's only 2 lines here. So if you have more accounts, you just add it as an attachment. So you can just use a Word document and then include the same information at the top of that, label the top of the payment, attachment to Section A, fill in the information, and then if you need more information for here, so investments, if people have multiple investments, same thing. This is a very broad category, so certificates of deposit, CDs, trust, IRAs, KEO plans, 401ks, profit sharing plans, mutual funds, stocks, bonds, commodities, and other investments. So other investments is a catch-all. Any kind of financial instrument, and it includes business accounts, you have to put it in here. So again, you don't want to be seen or suspected of hiding assets from the IRS. So be thorough. Virtual currency, this is another big thing. Bitcoin, Ethereum, there's too many to name them all. Mobile wallets, online, external, hardware storage, etc. And they treat it just like a stock or bond. They treat it more like cash. so you don't get a percentage off of it, but they pretty much, it's treated like cash. Whatever you have, they'll tell you, look, you can cash it out and give them the money. Real estate. So if it's your primary residence or not, it matters. Not on the numbers scheme of that, but they'll treat a primary residence a bit differently than they will monthly payments / payments. Just give them the total for a second, etc. Year you purchase it, purchase price, year refinance amount. That's all they're looking for. If it was refinanced, if not, just go for the purchase price and year purchased and the purchase price, and then the current value, balance owed, and equity in the property. Other assets, cars, boats, RVs. So they lump this all together, which I think is a little funky. So anything registered with the state as far as the car, boats, RVs, you have to include it. Whole life policies are treated like cash. With the vehicles, include the make, model, and year of the vehicles, and any business assets such as tool, equipment, inventory, etc. Here's the interesting thing though. Business assets, it's always on the forms. They never ask for it. If it's tools of the trade, what you use for the production of income, typically you don't have to list it. If they ask about it, I'm using that in my current business. Case in point here, true story. This is years ago, but again, it's pretty obvious. You had a company family that they would rent out Caterpillar tractors and equipment, and that was their business. That was their livelihood. They had purchased and had these very expensive heavy equipment, and they rented it out, and that's how they made their income. 2008 hit, and most of those were used for heavy construction for homes, and development and construction of commercial and normal residential homes dropped off a cliff. Homes were cheap. It didn't make any sense to build anything, so all buildings stopped. So all their tractors and heavy equipment was just sitting there. All they wanted was to buy enough time with the IRS so that they could start using their equipment again. It was their normal business, but now business was dead. And the hard part about it was, this is around 2010. When did business actually pick up again? It didn't really pick up again until 2014, 2015. And even then, the improvement was very moderated over many years. We didn't have the economy didn't explode. It didn't roar back. It eats back. So again, it's very hard to tell how long the recession is going to last, how long it will be before the housing market, in this case, improved. So if they were actually leasing that and had any kind of income through the year, we could have preserved that asset for them. But since it was sitting there, very valuable equipment, they were faced with a very difficult decision and had to liquidate those assets. So it has to be actively used for the production of income and being used currently. Credit cards, the IRS just wants to know about credit cards to know if you have a high credit limit, and then you can pay them. When they ask if you do have a spare credit limit of 1,000, 2,000 or whatever, and they ask, can you take this out? Say, no, I can't afford it. They will ask you to max out your credit cards to pay the IRS. It's not a good idea. In most cases, it's not a good idea unless you have a very special rate. And they can't force you to do that. So, again, what I don't like about the 433F is that there's so much information here shoved on into a very small amount of space. But this is the form that collections use, and they go through this bit by bit to answer all these questions. So, business information. And so, so most of this information on vehicles, you have to fill it out thoroughly for cars and anything else registered with the state. And again, just makes me shake my head that they require so much information in a small space. Um, this is for accounts receivables, balance sheets, um, and they want to know how you get paid for your business. Again, I would only use this for small businesses because they just don't have enough information here or space here to actually provide good information here. So accounts receivables owed doesn't mean you have that money. And what they're looking for is how much do you have outstanding. If you have a huge bill coming and as soon as it hits, you're going to have plenty of money. That's really what they're looking for. If you have normal business receivables, money comes into the business, money goes out. You don't have to pay all your receivables to the IRS because it would kill your business. And then again, the responsible party's name of individual business on the different accounts for the business or merchant account numbers. Employment information. So I'm going to touch on this, and this it's just 2 pages long. But this one page that they have here really is, this is where the meat of the analysis comes in. And they want your current employer and for your spouse if they're filing jointly with you. If they're not filing jointly and you have a 2-person household, again, I've done whole episodes on how to prorate expenses. That's if they don't owe jointly with you, or you both don't owe the taxes. Go back, rewatch one of those videos. It gets really fun, so I probably will break that down again. If you have more questions, just give us a call. But I want to focus on this as we close out the show. How often are you paid? Check 1. You can do 2 things. You can put your weekly, bi-weekly, semi-monthly, monthly amount. Just choose one. I would do monthly and do the calculations on your own, because if you do bi-weekly, they will figure it out for you. And you won't know what they're going to treat your total income as. So they look at gross per pay period, taxes paid, federal, state, local. And then typically, they want to know how long you're at the employer. So if you've been there longer or not. So they will take this gross pay period, use the multipliers that we've discussed in past shows. So 4.3 for weekly, 2.17 for biweekly, semi-monthly, so you only get paid twice a month. Doesn't matter how many weeks are in the month. Or if you get monthly. What I highly suggest is that you do the calculations on your own to figure out what your monthly income is, and that's what they're going to look at. So if you put weekly pay, that's not going to give you a good idea of what you actually qualify for. And that's understanding how they do this is very, very important to knowing what you're looking at. The IRS is horrible at doing this on their own, and they make mistakes. And if you don't understand what's happening and how they're going through when they spit out horrible numbers, sometimes it's just they mix up the numbers. It's a typo. Sometimes they don't hear you right, and they can come out with ridiculous numbers. And if you don't know what your numbers should look like, you can get some really bad results from the IRS. Unfortunately, it happens more often than you would think. So highly recommend you look at the gross pay period per quarter, and we've done entire shows on how to do this, how to break down income, multiply that out, and look at the allowable expenses off your paycheck. A lot of those allowable expenses will go down here. For example, if you're paying for child support, dependent care, estimated tax payments, or just health insurance is very typical. Term life insurance, disability insurance, etc. Union dues, a lot of those things, expenses off your paycheck will go down in here. But again, can't recommend enough that you calculate this out. You figure out the state, local, or Fed, state, and local taxes. And if you're not having enough withhold, or you're not paying enough estimated tax payments, start doing that, and you will get credit for that higher amount. So we're going to have to carry this over till tomorrow, because again, this last part really is the meat of the analysis. So If you have any questions, you always reach out to us at 520-485-7371 or contact us at guardiantaxlaw.com. And again, be prepared when you call them, have your numbers together so you can have a successful resolution.